Okay, we're live. All right, everyone. This is Casey with Richard. How's everybody doing? Please let us know if you guys can hear us. Just go ahead and chat in the chat bar and let us know that you can hear us. Okay, looks like we're good. How you doing this morning, Richard?
Great. Fantastic to be here. It's the first time I'm actually doing a webinar with you guys. Really excited. Got a few things to show you and all the guys attending this webinar today. So yeah, excited, and let's see how it goes.
Me too. I think it's going to be great. Actually, I know it's going to be great. So I want to thank everyone who is here. Thank you so much. And why don't you guys just let us know where you're from? Just curious to hear about where everyone is always getting our emails and watching our training. We're always interested to know where people are from. And also let us know if you guys are on our email list and if you really enjoy those great updates and trainings that Richard is sending via email. One thing that I tell pretty much everyone, and I don't even know if I've told Richard this, so if I haven't, I apologize. But I tell everyone, I have been on so many newsletters in my entire life, and I don't think that there's a better one out there anywhere that I've ever seen other than the one that Richard puts out. It's so detailed and great. The information is just unmatched from anywhere I've seen. And I'm not just saying that because Richard and I work together. I'm really serious. So, okay, looks like we got a lot of people here from all over the place: Australia, Nigeria, India, Malaysia, Colombia, the UK, New York. So for those of you in the US, that's me here too. Hello, and all over the world, hello. Thank you. Some Welcome people from Italy, California. Wow, really early in California. You're a early riser. Excellent. All right, well, looks like we got a lot of people coming in, so I like to respect your time, so I'm going to start promptly. And so let's go ahead and just jump right into it. And so first of all, I just want to say thank you so much for coming. And today, the training is going to be by myself, Casey Stubbs, and Richard Kay. We're very happy to have you. Thank you so much. I'm going to give a little rundown before I introduce Richard. Richard's going to do all the training, and I'm going to talk a little bit about that here in a minute. But just to give you a little rundown of what you're going to do today. So our purpose today is real training and real solutions that will help you become a winning trader. We want to teach you to trade one key element of Richard's trading system today that will help you get true trading success and also give you access to our course for a special offer. Now, one thing I want to mention to you today is that this training that Richard is always giving in the emails, his analysis that he's always doing, he's going to be teaching a really key component of that system today, one really important piece of it. And it's not going to be the complete system just because we don't really have enough time in one webinar to go over that entire system. But it's a really important element that can help you tremendously. And so there's going to be a lot of value in this training. There's not going to be a lot of fluff. It's just going to be straight up training and teaching and education. And Richard is going to really dive into it. So, and then at the end, we're going to give you a special offer to the Exponential Profits course. But here's a really short introduction about me. So one kind of cool thing is that my name's Casey. I'm really thankful to hear, and my main purpose here is to introduce Richard because what I actually do is I find successful traders, and once I find them, I help the world discover their methods. Because why? It's a win-win situation. It's a win for me, it's a win for Richard, and it's a win for you guys because I look and search for excellent traders that have something of great value and can help traders. So that's what I'm looking for. I find someone that really has something good, and I try to get them out there to the world. And that's exactly what's happened with Richard. when I met him a couple years ago, we helped him get his system out under the brand of Price Action and Income to the world. And so I'm really pumped up today to be able to give this webinar just because it's some great training. And just a little bit more about me is I have my website, CaseyStubbs.com. You can follow and interact with me on Twitter. And also I'm a host of a podcast called the Cash Flow Hacking Podcast. It's the tips, tricks, and strategies to increase your cash flow, where I interview experts from all types of fields, whether it's a trader, whether it's a real estate expert, whether it's a Bitcoin expert, whether it's a business entrepreneur, whether it's someone that makes money on Amazon, whether it's a brick and mortar person, whatever it is, I'm just looking at people that can help my listeners make extra cash flow. So if you wanted to check out that show, you can get access at CaseyStubbs.com. And maybe if Richard's up for it, I might have him as a guest one of these days.
Oh yeah, that'll be great.
So this method we're going to teach you is from Richard Kay, and I've personally been trading Richard's trades, and they're excellent. And I'm going to go ahead and share some of those through at one point during this training. I think it's really important so that you can see that this really is a serious method, and there's some really good things about the method. But the trades are very good. And so again, my mission is to trade part-time, run a successful online trading education, and help traders master the exponential profit system. We want to really see traders have success. That's a big part of what we do. But we're going to introduce market geometry, which is part of the name of this course. It's a system. One of the key things about the system that I think is really important is that it finds accurate signals with a high risk to reward ratio. Now, I recently, and when I say recent, yesterday, I read a really interesting, actually it was a video. I watched a very interesting video about how only 1% of day traders are successful. Now, if you are listening to this, I want to know if you think that that number is true. You can go ahead and just type that in the chat if you think it's real. And I actually believe that number. And I don't know if the numbers was talking about the difference between day traders and long-term traders, but I know for day traders, it probably absolutely is true. And the thing about this system is that it has a combination of something that I don't think I've ever seen before, which is a high win rate and also a high risk to reward ratio. So usually, and Richard can talk about this later once I introduce him, but usually you find one that has either a high winning rate, 90%, but a terrible risk to reward ratio, or a high risk to reward ratio with a very low winning percentage. But this system actually has both, which is what makes it really powerful. And so remember, when you are trading and only 1% of the people are successful, your chances of being successful right from the very beginning are almost none. And so finding a system like this makes all the difference in the world. And just here's a little screenshot of some of the results that we've seen here since we've launched in 2018. Very good performance. It's a 370% ROI. And on this screen here, it shows the average win is 57%, which is pretty amazing. And the average win is $1,771, where the average loss is $629. So again, the key numbers to focus on is a 57% win rate and the average win being 3 times bigger than the average loss. And now, obviously, we're not making promises that if you trade the system, you're going to get results like that, but that's the kind of results that you can get if you learn to master this system. And now just one personal thing about success for me in my life. I believe I've been pretty successful because I do what I want to do. I have been telling people I've been retired for 10 years. I've been in business for 10 years. And I'm just going to share personal success tips. Number 1 is I get with great people. Number 2, I make a plan. And number 3, I take action. So what I've done is I've gotten with Richard. Richard is an amazing trader. And I find people that are really good at something. And I work with them. And I use them to help me. And I help them and they help me. It's a win-win situation. Then I make a plan and I take action. And so I am now opening that up to you to allow you guys to get with great people by getting with Richard and getting his training as well. And so if you want to be successful, you got to be an action taker. And I believe that those of you that are here are action takers. And so whatever you do, you must learn to take action and do things differently if you want to get a change in your life. 99% of traders are failing, so they're doing something wrong. In order to have success, you really have to do something different. You've got to change the way that you are operating, and we're all giving you an opportunity to do that today. And so before we're going to talk about our course, and I'm getting really close to Richard because I know that's what everybody wants. I just think this stuff is really important, and that this offer is not for people looking for overnight success. That's another reason why we see the train wreck of 99% of the people failing is they have crazy expectations. They think that they're going to be successful automatically. And Richard could tell you from his story, his success did not happen automatically. He had to work for it. And I'm not trying to say the four-letter word that no one wants to hear, but he had to work. He had to apply discipline. He had to really educate himself to figure this stuff out. And it's not going to, we're not offering you a magic pill that's going to make you avoid that. Okay. So I just want you to know that if you think that this is a magic pill that you're going to be successful overnight, we really would just like you to leave, because you're not ever going to have success with that kind of a mindset. So we take that very seriously. And that's why our members, they get the success that they want out of our program. We're really serious about doing what's best for you. That's why we don't tell you a bunch of crappy sales stuff. We actually tell you the truth. Even though we're not going to get tons of sales, we get the right people. And that's really our goal, is connecting with the right people. So if you're here today, then we're glad you're here because you're the right people. So again, with all that being said, we are really excited, and I'm going to go ahead and introduce Richard. I've been working for Richard for about 2 years, and it's been such a pleasure. I think Richard is a fantastic trader. He's a fantastic person. It's quite an honor for me to be able to work with him. So I thank him for that. He's really been a great addition to my my professional life. And so it's quite an honor and a joy to be able to introduce Richard to all of you right now. So I'm going to go ahead and step aside and stop sharing, and he's going to start presenting now. So thank you, Richard.
Hi, guys. Thanks, Casey, for the great introduction. Let me just get my slides going here. Hang on 1 second, and then we can get started. Share screen. Here we go. Nope, not showing up. Let's try again. All right.
It's there now, Richard. We got you.
There it is. Okay. Well, thanks very much for the great introduction, Casey. It's been an absolute pleasure working with you guys for, well, nearly 2 years. Before we do get started with my strategy, like Casey said, we broke this up in 3 parts. Main reason being is that it might sound complex in the beginning, but each part actually plays a great role in the whole of the strategy. And I think if everyone takes a small part of everything back, and there will be recordings of these webinars, and review these recordings, and actually attend the part 2 and 3 of this webinar series, then you'll have a really good understanding of what it is that I try to achieve in my daily life. I do not just teach a strategy to anyone. I've exclusively share this with the guys at Price Action Income. And it's what I think is very important to understand is that I actually trade this strategy myself. It's not something I sucked out of thin air. Something I've been working on for over 4 years, and to be dead honest, something I keep on trying to perfect all the time. So before we dive into what the strategy is all about and present the part 1 of this webinar, I just want to give you a quick rundown of who I am, where I'm from, and what my experience has been with trading. Firstly, my name's Richard. I live in Cape Town in South Africa, and I've had my first taste of trading about 12 years ago, where I opened a very simple, small $50 Forex trading account. Like so many people, lost my money. It was a very small account, thank goodness. I think I got started by just doing internet search and got caught up in all this hoo-ha that people sell online about how, you can make hundreds of thousands of dollars in a very short period of time with little to no effort. I'm sure a lot of you guys have got the same experience and know that these sort of things do not exist. And when you do ever come across something that tells you something's easy in trading, then you better run as fast as you can, because there's no such thing. Even when you guys get a good understanding of what this strategy is all about, it will still take a lot of effort from your behalf to try to figure out or master the methods that I'm going to explain to you guys. In part one, we'll be looking at a few simple things you guys might be all familiar with, so just hang on in there, and when we get to part two, we'll actually be delving into more interesting stuff that I feel a lot of people are not aware of, or maybe have heard of but just got no clue of how to use in applying on with their trading. So I think that's about it. I'm going to dive into what the strategy is all about. I call this the exponential profit system. And it's basically the strategy, like I said, that I've been developing over the past 4 years, that I've been trading full-time for the last 4 years myself. A lot of up and downs in between. A lot of it's pretty much got to do with the emotional side of trading. But as the years progressed, I got to the stage where I trust the strategy fully, which is a very important part of trading. Because once you do trust your strategy, it eliminates stuff like fear or hesitation and all those sort of things. And I've actually broke down the strategy in different parts so that I can make sense of what the markets are showing me. And this is where we're going to start with today, and just go through the first part of this course. So without further ado, we're pretty much going to just cover trend identification and corrective patterns today. And like I said, this is only the first part of the entire course. Now, if I have to put everything that I'm trying to do in a nutshell with my exponential profit strategy, there's only one main goal that's got different parts to it. My first goal is obviously to identify trend direction, and I'll also use techniques that can signal when a trend might be ending and where it might become dangerous to try and figure out if the trend is going to continue or change. Then what I'll do second is to determine levels within a trend where I think a correction may appear. Then I use techniques like pattern recognition or correction types to identify the type of correction I might be dealing with in real time. And then once I've got clues as to what I might be dealing with in a correction, I use market geometry techniques, which is actually going to be in part 2 of our course, to find area or zones where I think that correction might end. And if that was not enough, I then have to follow a set of entry conditions to confirm an entry for me, which actually raises the probabilities of me actually being right when a trend does, or correction, sorry, does end. And then I enter into position. And the main thing about this whole strategy is to trade with the trend, with the path of least resistance. So just to run through that quickly again, we first want to know what the main trend direction is. Determine levels where corrections may appear ahead of time. Then when a correction does appear, we want to identify the type of the correction we might be dealing with, and then use market geometry techniques to find an area or zone where that correction may end. When I've determined the zone and I have a few set of entry conditions that appear within that zone or that level that I'm wanting to trade, and it confirms an entry or gives me a signal, I'll take a position and then trade with the direction of the trend. All right, let's go to the second slide. So like I said, we're only going to be focusing on trend direction and correction types for today. So the first thing we're going to have a look at is what constitutes a trend. And this might be very simple stuff for you guys, but it's always good to review this. Obviously, when you're looking at an uptrend, you want to see a set of higher highs and higher lows. And in a downtrend, the exact opposite, lower lows and lower highs. And in the next slide, before I get there, we'll actually show you a graph or a chart of what I'm showing you here, and then use simple techniques like trend lines and a break of previous market structure to identify what we constitute as a trend. For this presentation, and I'm going to show you some live charts later on with real examples of what our members have actually seen. Some of the forecasts I've done recently is I've got a chart of the Australian dollar, US dollar here on a 240-minute chart. And before I go further, I have to also say that I do not just trade Forex, I trade commodities as well. And I have different ways so I can approach. I can trade options with that or whatever. So this is a great system. You can actually use different approaches to approach them, not just like trading the direct underlying. You could also employ options on that. But let's get back to this chart. Like I said, simple stuff. Everyone should know this. When we're looking at the trend on the left-hand side here, we had a little uptrend. And like I said, this is only on a 4-hour chart. And our 4-hour chart is my main operating chart that I look at. If you were to zoom out and go to a weekly chart, for example, obviously, there could be minor trends or stuff like that over a long-term trends going in a certain direction. But with this strategy, I'm only focusing on intermediate trends on what my 4-hour chart shows me. So I just colored in what a simple trend line is used for in an uptrend. When you go and get higher highs, higher lows, higher highs, higher lows. And in this case, I used the blue line, very simple. When price actually broke through that line and moved down and broke previous market structure, you can see these horizontal red lines here. This would be the first time that I would actually start saying, I don't want to be trading to the long side anymore, but I might have to reverse my direction and only look for trades going in the opposite direction. Then on the opposite side, trends going downwards, just simple trend line. Going to make a set of lower lows, lower highs, lower lows, lower highs until that trend ends again. It breaks the previous trend line, goes upwards again, and breaks market structure. Now, this is all simply said, and obviously if you remember what I said about what I'm trying to do is actually determine what a trend might be, and then I want to be trading these corrections that's within a trend and trade with the direction of least resistance, in this case, for example, downwards. Now, how do we find, that was trend identification. And obviously the second part that we had was to figure out where are we most likely to see a correction within a trend. Now, what's really powerful about the strategy, although it's very simple, is that I would just use plain and simple Fibonacci extensions and apply it to what I think is a trend, and then wait for certain extensions to be reached, and then switch to different time frames and have a correction confirm, and then try to figure out what correction I'm dealing with before I proceed to the next step. So on the next slide, you'll see that I'm using the 100% Fibonacci extension, the 1.382%, and I color-coded these different colors. The 1.618%, which is your golden ratio extension, very important. 1.786, which I colored red, and a 200%, which I colored light green. This is just for explanation purposes. When you guys might be interested in the course later, I always keep everything the same color so that there's no confusion. Now let's jump ahead and show you some actual ways of how I would use the Fibonacci extension and show you that corrections actually do appear when they hit these extension lines. Now, here we are on the 4-hour chart again. Like I said, it's my main operating time frame. And using a simple Fibonacci extension, after price broke this previous uptrend or intermediate uptrend and previous market structure, there was nothing for me to do here yet until about here when price start moving downwards again. So a simple technique would just to be joining the upper high there with the lower low and then your lower high, and then you get your Fibonacci extensions projected downwards. Now, as you guys can see, I put black arrows here, and this is actually the areas I've got small trend or small corrections over here, or much larger ones happening over here and here. It's pretty interesting to see that when price actually reaches these levels that you start getting corrections. And it doesn't always happen. For example, here at the 100% price completely sliced through there. But the main thing is to actually wait for a correction to happen. When price reaches one of these levels, here we had like a small trade, and then directly afterwards, it didn't even reach the 1.618%. We start getting a much larger ones. And these are the ones that I actually live for, because they're the ones that give huge profit potential when you actually trade them. I know there might be a lot of guys that, don't have time to sit in front of their computer screens all day long. And, this whole strategy can actually be broken up into different time frames. If anyone would ever want to ask me, like, how can we day trade this and all that sort of stuff, it is adaptable to different time frames. The only reason why I use a higher time frame is because I find that there's much less noise on a higher time frame. You guys could probably agree with me on that. The closer you go, the lower you go into a time frame, the more noise you get, and the more you sucked into all of that noise, and you'll probably make more mistakes as well. So this is a very simple technique to show you that, okay, I haven't traded anything yet. I just wanted to see where corrections might appear, and I knew about these levels before it happened. So once price reached these levels, we started getting corrections. And this is where we're going to go into the next section, and I'm going to be focusing on a very important part of this course, which would be corrections. Let's just move to the second slide. Now, I follow four main different type of corrections when I trade. There are many more. People call them all sort of different names. I don't care what they call them. I basically take the corrections that I follow from Elliott wave theory. And before everyone starts running, and when they hear the word Elliott wave theory, I just have to say this, is that I apply it in a very loose way. Let's put it like this. Elliott wave theory is the only way for me that I found that correctly identifies in a really in-depth manner how to identify what a correction must look like, and then classify them as well. So rather than focusing on what a trend direction might do, those of you guys that are familiar with the Elliott wave knows, and I'll be the first person to admit this, that Elliott wave is great in hindsight. Any Elliott wave logician, as they call them, can go into history and go tell you, yeah, this is exactly how we labeled a wave, or this is how we labeled a correction. But I found that my greatest success happened by just identifying, using some sort of Elliott wave theory, and applying that theory onto these four type of corrections. Now, first off, I'm going to go through every single one of these corrections, and then I'm going to show you some real examples, and I'm going to show you actually how I apply them loosely. What we're not going to be showing in part one, though, is that you do not have to be 100% correct. And this is a very important part, to label these corrections properly, as a professional hoo-ha Elliottian would be able to do, or try to do. We're going to use market geometry to guide us in our decisions. And this is a very powerful point that I need to put down to you guys, is that recognizing what a pattern is, or a correction is, or how it might unfold, and then applying market geometry over that, is what makes this strategy so powerful. Towards the end of this presentation, I'll just give you one or two examples quickly with some market geometry, but I won't be going into market geometry that much. Just to show you guys that Yes, we need to know what a basic single zigzag or a double zigzag or expanded flat or any of these funny named corrections might be called. The market geometry that I apply over them is the actual golden nugget that helps me find the end of the corrections. So let's quickly delve into some examples here of a single zigzag. And I'm sure a lot of you guys know what a single zigzag look like, or some people just call it a simple ABC. And we're going to stick to the Australian dollar here. And a simple ABC is basically a start of a correction going opposite of what the main trend was doing, in this case down, what we'll call an A wave or label A. We'll have a B wave that makes a higher low, and then a C wave that ends the correction, which normally goes higher than where the A wave stopped at. This is just a simple A, B, C. Now, what you probably notice here is that I didn't put a lot of markings in here and wave A is got to be 1, 2, 3, 4, 5, all that blah, 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 blah. This is exactly what I've mentioned before, is that I think it's a very important part. You need to understand or know how these corrections play out. And every single correction, after I'm finished with this presentation, go on to the other parts of this course, has got their own sort of behavior. And once you can spot these sort of behavior or the DNA of these corrections, you then know what to expect. And that's when we use market geometry later on, that if you know what to expect and price follows your expectations, you execute a trade when things go your way, according to your plan. Now, I've mentioned this as a single zigzag. There's also another version of this where we will call an ABC flat. And it's not something I normally look at, and I kind of tend to miss these trades. This is why I only focus on a single zigzag where my C wave will definitely be going over my A wave. So that was pretty much the most common, or let's say the easiest correction that you can get. The next one up is that I teach in the course is a double zigzag. And a double zigzag, very simply put, are just two single zigzags, like you can see with the black lines here, A, B, C, connected with what we call a WX axis, and then another A, B, C. Now, there's many ways to label these sort of corrections. I'm going to come back to this one as an example later, where I'm just going to quickly apply market geometry to it so you guys can see that even if you do not get the labeling right, it's not the end of the world. All you need to know is that you somehow get an idea of what's happening, and when it does happen, you can then use your market geometry to find zones where you think this correction might end. So here again, a double zigzag is just basically two single zigzags that we connect with what we call a WX wave, followed by another ABC, or a second zigzag. And the entire thing we call a WXY correction. Next one I follow is what we call an expanded flat. And an expanded flat is also just labeled an A, B, C. And there's different versions of how this might play out. In this case, this is an actual example of that previous downtrend, or the most recent downtrend in Australian US dollar, where a expanded flat happened. And what happens here on an expanded flat is you'll have an ABC up to make an A, and an ABC down to make a C. A B wave, and then we'll have 5 waves following that. Again, guys, don't break your heads about having or how you're going to label these things properly. Even I get it wrong all the time. I mean, you could have put 1 here, 2 there, 3 here, 4 there, 5 there. It doesn't matter. Later on, when we apply market geometry to this, you just need to get used to what the structure or what these things look like. Focus on these black lines rather than actually all the mess that's going on in between. When you actually, if you guys want to sign up and get hold of my course, then I'll go into all the nitty-gritties as to what clues gave me that this was an ABC expanded flat before even all of this happened. It's just all these small little details. The markets always tell you a story, and if you study these corrections and you become a professional as to how they actually develop, then using market geometry with that is going to definitely make a big change in your trading. So then we got to expand it flat there, and then my absolute favorite is called triangle corrections. Now there are different versions of triangle corrections. We got symmetrical triangles, and we have ascending or descending triangles. These are probably the most easiest patterns to spot on a chart, and they normally require quite a bit of patience to wait out. But like I said, easy to spot, and in this case I'm showing you a symmetrical triangle, and they are always labeled A, B, C, D, E, correction ends, and the trend continues. In this case here, symmetrical triangles actually a sideways movement that's actually contracting towards the end. As you can see here, we started with a massive A wave up, massive B wave up, and then all these waves started getting smaller and smaller and smaller. Now, what I teach in the course is techniques to use so that you make sure that you wait as long as possible to identify when the E wave might come, so you don't jump into this trade too quick, which is also very important. So this was just a triangle correction. We call a symmetrical triangle correction, an A, B, C, D, E. Again, later on, I'll be showing you some real life examples of these patterns and how easy they are actually to spot. Another version that we get is a ascending triangle, and ascending triangles you'll definitely spot in a market that's going upwards. And the same thing applies here. Market's been going up. We start getting one wave down, A, B, C, D, E. And why it's called an ascending triangle is because this line up here is horizontal. Doesn't have to always be horizontal, but it's pretty much mostly horizontal. And you can see that price has been bumping against it once and twice. And this was a clue that we're probably going to get an E wave. And if you knew that you were counting an A, B, C, or possible A, B, C, D, E, that you've been expecting a low soon. And I mean, the rest is history. After what happened here, price just shot up again. So these are pretty much your basic corrections that I follow. There are more difficult ones. Now, I tend to try to not focus on too many things because I don't want to be a jack of all trades, because in trading, it just doesn't work for me like that. But anyway, just to delve a little bit deeper into the triangle corrections, I want to show you another cool thing that I use quite a lot on triangle corrections to help me identify possible zones where a correction might end. There's a definite Fibonacci relationship in triangle corrections. And on this chart here, after we had our first wave up and our lower or higher low here that I marked as a B wave, price could have just dropped down from here, in all honesty, but it didn't. This is actually a pattern that we were following, that we traded. And the B wave came up, and now the first thing that I had to do was to use my Fibonacci retracements. And you'd simply just join the A wave with the B wave, and where does price stop? That is 0.786%. It doesn't have to always stop there. A lot of times it will stop at the 0.618%. Just depends on how the pattern's actually unfolding. But I have to tell you guys that by this stage, I wasn't trading at all. I'm just thinking, okay, by this stage, we might be dealing with a triangle. So I had to wait for a D wave first. And even then, I wouldn't trade it. I'm still going to wait for an E wave. And every step of the way, for every wave that happened here, I just keep on using my Fibonacci retracements, and in this case we had a beautiful kiss of the 0.786% Fib retracement there, and price went up. At this stage is when I was highly alerted that this correction has a high probability of ending very soon. And when you actually study the course, if you guys buy this at a later stage, the power of these patterns or recognizing how they like to unfold lies in the fact that you can identify a zone where this thing is most likely going to stop at. And then when it does reach those zones, we're going to start following a set of entry conditions. And when your entry conditions hit those zones, let's put this in the next chart. Where did it pull to? It pulled right up to the 0.68%, and it ended in an E wave, and the trend resumed. One thing I have to be dead honest with you guys here is this was not in a hindsight trade. This is something that we've tracked with our forecasting members, another service that we provide. And it's something that we had to wait for. And if you look at the time span of this thing on a 4-hour chart, this is about since the 9th of July, all the way till, what was this, probably about the 10th of August before we actually had a setup. But one thing to take note here is that by early August, I was pretty convinced we were dealing with a symmetrical triangle. And all that we had to do was identify an area where we think this pattern might reverse from, and traders knew about that level way in advance. Now, here, E-wave could have ended over here at a 0.786%. And this is why it's very important later on that I'll show you some market geometry techniques that would pinpoint that that was not actually the end, but the end would happen over here. Okay. So that is just a basic, brief introduction of the corrections that I do follow in the markets. And before we're actually going to go to introducing you to what's lying next in part 2 and 3 of this course, I would like to show you guys some live examples. I always believe that it's great to share live examples rather than just prepare a slideshow and show you what could have been or what have happened. And just want to show you something that how I actually approached a recent trade that we've done. And this is not on the Forex Bay. I'm just going to quickly share my slides with another screen. There we go. It's not showing. Let's take this one quickly. Hang on with me, guys. 10 seconds. To share. Oh, it's not. Let's do this quickly. Hang on 1 second. Casey, are you still there?
Yeah, I'm here.
I'm just trying to get that one.
If you click that screen share, just pick the one that has your charts on it. There you go.
Okay, sorry about that, guys. My first time I'm actually doing a webinar. This is a recent trade we took in Boeing, which is a stock on the Dow Jones Industrial Top 100. And from this chart, it was very easy to see, applying first off my trend channels, that Boeing was obviously a very strong upward trend. Now, I have to be honest with you, I didn't start looking at Boeing until about here in August, sort of somewhere in August. But what I could see on this chart was a clear sideways movement. And mostly when you do see clear sideways movement, you've got either symmetrical or ascending triangle underway. So the next step was to label that properly, which I believe I'm a great believer in doing properly, because it forces you to be very disciplined and to also have patience to wait for these corrections to properly finish before you actually enter. Now, I just want to show you the second chart here. And this is one that I've shared with my forecasters in a report. And as you can see here, there was a few ways that I could have labeled this. I was at the moment, or at that stage, not very sure as to where my D wave might be. And this is perfectly fine. This is the power of using these corrections in a proper way, because if you can identify an entry zone ahead of time, you don't have to be that accurate with these sort of things. It's a very important point that I want you guys to understand. And at this stage, you can see the date up here. We were looking at this for the first time on the 23rd of August on a 4-hour chart. And I was saying we got a clear sideways movement, and it's definitely contracting, and these waves are getting smaller and smaller and smaller. At some stage, there's going to be a breakout. And since we identified the trend to be upwards, we have to trade to the upside. Our trend line told us that. So I labeled this as an A, B, C, D, E. So E wave might have ended at this stage, but luckily it didn't, which made me switch back to a different labeling at a later stage. Let me just get that slide going. And here you can see that on the 23rd of August, the same day when I start labeling these things, I took a Fibonacci retracement from what I thought was either the wave C or E. If it was wave E, I probably would have missed it, but it wasn't. So luckily we only had a wave C and a wave D. I used a Fibonacci retracement and identified a level where I would like to get long. And the outcome of this trade, and I'm going to show you quickly on my chart here, was this. We had an A, B, C, D, E, clear triangle. Price actually came through my triangle by quite a bit, but I had my stop below what I considered to be the C wave, and I had 2 clear upside targets. Now, these targets that I place is also taught in the course, and I'm also using market geometry to place my targets, not only my targets, but to trail my stops safely, which is an extremely important part about trading. It's very easy getting into a trade, but it's a total different story trying to manage an open trade properly without getting stopped out. So using
Richard,
yep.
Can I jump in with a question?
For sure.
So on this particular trade, you have the E wave here, and you took the long after you saw the price action moving up. What gave you the thinking that it was going to break through that downward trend line, like the BD trend line? Is it because E waves are usually the wave that ends up breaking an ascending triangle?
Yeah. If you look at the top here of this trend line that I drew down here, you'll at a very high probability that price will keep on bumping against there. And in this case, it was a very funny looking triangle. I have to be dead honest about that. The markets aren't very perfect. The markets can't. Sorry, I'll show you some symmetrical triangles later on. That's much clearer than this one. But the story is that an E wave, expecting an E wave, was at this stage highly probable before it shot up. And there was something that I was looking at, and I'm going to pull this over quickly for you guys. Let me just, this is now a live chart. The thing that gave me high confidence that this E wave was also ending is when I first time, and I'm going to show you a little bit of market geometry here. That told me it was probably the end of the E wave. I don't normally use, this is what I'm drawing on here is what we call a pitchfork, which is a market geometric technique. I'm not going to go into it much in this part one of this course, but I definitely would advise you guys to stick around for the next part because you'll be going to be seeing some pretty amazing stuff. Now, how I use these pitchforks in a correct manner with different settings than they normally come with to find these end of corrections. And in this case, also what gave me very high confidence level that the E wave was done was when it also reached the 0.618% and it confluenced with the end, what we call a lower median line of a pitchfork. And we had a huge reversal bar going upside. In this case, I didn't trade the utmost lower end of this. I was actually a bit late on the trade. But I put a position up here and price just never looked back and went straight to target 1 and target 2. So I hope that kind of answers your question, Casey. Hopefully I wasn't spinning around it.
No, that was excellent. Thank you.
Yeah, so that pretty much concludes the corrections that I follow as a trader. I know that there's much more to this, but what I'm trying to get into your guys' minds here are that you don't have to be 100%, and this was a perfect example in Boeing of that I was unsure about how to label my chart properly. I didn't know if this was a C wave or was this not going to be a C wave, but I could identify with a high probability that where I would think an E wave would end, and when I actually seen a certain amount of my entry conditions, which we're not going to cover today as well, happen at that little sweet spot, that gave me the high confidence that this is going to have to be a long entry, and I'm going to take the chance to take this. The E wave must be done by now, and in this case, price never looked back. Another thing I want to mention here is, although I put my stop here, by the time price broke above these levels here, I was already starting to trail my stop. So although in some instances I might have what looks like a much larger stop, I actually start limiting my risk very quickly because I do not have any tolerance for risk whatsoever. If something doesn't work out, then it's not going to work out, and I'll limit my risk as soon as possible. Like I said before, if things go your direction, it's so easy to give back all your profits if you don't know how to trail your stops properly. And this is another thing that I'm going to be teaching in part 3. So without further ado, I'm also just going to quickly jump into this Australian dollar chart on a live chart on that 4-hour that I've showed you guys previously. With these Fibonacci extensions that I've used. And you can see that price actually went way further than a 200%. We want to bring your focus back to a few small things here. If you look at when price first hit this 1.382%, we start getting this action here. Now, this is where I want you guys to get to at some stage where I can tell you without actually labeling this, and I know this is in hindsight, but this is the only way you're going to learn, is to go onto your charts, open a 4-hour chart of your favorite market, and look at the corrections I've showed you today and see if you can identify these things, even if it is in hindsight. But what I teach in the course is that when you do see corrections like this happening, there are certain few things that can give you clues as to what might be unfolding. And when things do then unfold as you expected it would, then you trade. And you'll get more than enough time or preparation to plan for a trade. And once it actually hits the levels you've been looking at, to enter a trade. So it's a perfect strategy that it requires patience, yes, but the returns on these things are normally is huge, and your risk is very limited. This is one thing where I'm just quickly going to show you what happened here. This would be an ABC, XABC. This is what we call an expanded flat. And if you use market geometry over this, and you'll see this happen, sorry, not expanded flat, a double zigzag, you'll find that on double zigzags, and I'm going to show you guys in the course, how you're going to have to approach double zigzags with market geometry. Every single correction that I follow has got a different approach when it comes to market geometry. And in this case, rather than measuring the first ABC, we measure the second ABC. And where does this correction end? Right here at the top, what we call a red warning line. And yet again, I'm not going to explain all about my pitchfork in this session. But knowing about what to expect, and when it does happen and you reach levels that you've identified in advance and then follow a set of entry conditions at a later stage, you enter the market with high probability of this thing working out. And this is why it could have been easy for me or some Elliott Gravitician. I can invite someone that's really good with this sort of analysis, and he might have been saying this. And then what was this then? You know, every single elitician is going to label their corrections differently. And this is why it becomes so important that you need to overlay something like market geometry over these sort of patterns, so that it actually guides you as to where those corrections should end. And if you have some sort of basic understanding of what a correction looks like, then your probabilities of finding the end of those corrections, like it did in this case, become so much higher. So no, guys, there's probably a lot to take in, and some of you guys might be ooming and ahhing about about the corrections and what I've had to show you here. But in the end, is what the course is all about. I just want people to have a rough understanding of the corrections that I do follow, what they look like, and if you have a basic understanding of how they materialize, and there's always subtle clues these things give you while they're developing, then we use market geometry to find those end of those corrections with a very high probability of working out. And then in this case, the trend just continued again. Second up, and this is going to be my last example, and you guys could probably see this. What happened the first time when the market hit the 1.618%? We had a correction. What happened when it reached the 1.786? We had a much longer correction in duration. And if you guys were looking at those symmetrical patterns before that I've showed you, the triangle corrections, this was a clear triangle correction. And let me label that for you guys quickly. And I recommend you go onto your own charts and you kind of find these corrections yourself and start labeling them. And the more you do this, the more you're going to start seeing them pop out at you while you're actually trading in real time. Because by the time we were sitting here, for example, if this was the right-hand side of the screen, we as traders do not have the ability for hindsight. We have to trade the right-hand side of the screen. And in this case, if we thinking we were dealing with a triangle correction, this probably gave you the clue that we're going to have to be looking for an end of an E wave very soon. And if we label our E waves properly, we'll be going A, B, C, D. So we know we need one more wave for this thing to end. And rather than just entering into it, in this case, it pulled back beautifully to this little trend line over here. We can also rip out our Fibonacci retracements and see if there's any relationships between these waves. In this case, between A and B, we went over the 1.786 a little bit. We got it from B to C. Oh, sorry about that. Let's bring the retracement back from B to C. Price ended on the 0.786. And even if you're not right 100% labeling these things or using your Fibonacci's properly, it doesn't matter. This is as long, that's why I built in a very important part of this course, and I'll continue to grind this into your heads, is that you have to see a certain set of entry conditions happen at these levels that you identified before. And then here again, this was a beautiful symmetrical triangle, finishing on the E wave, and there we go down. Last one, let's quickly look at a single zigzag. Here we have a single zigzag. A, B, C. Again, this is just in hindsight. A, B, C. But the trend confirmation or the correction confirmation happened over here. So we know we might be dealing with a C wave. And how did I find the end of the correction? I use my pitchfork again. And where did it end in this case? At the upper median line of my pitchfork. Again, guys, I'm not going to go 100% into how to use these pitchforks. It's a complete lesson on its own. But I hope that you can start seeing that as long as you have a general idea of what a correction might look like, and then you apply techniques like market geometry over that, your probabilities of actually finding the end of those corrections, even if you're not labeling it right or counting these small intermediate waves like most eliticians try to do, you can still find the end of these corrections with a high probability of success. And if that was not enough, I still wait. Once I've identified a level, I wait for price to reach there. And if it does reach there and I see a certain amount of entry conditions happen at those levels, then I take a trade. So it does require quite a bit of patience. But what I really enjoy about this is that it gives me time to prepare. And when things do follow my intention and it gets to levels where I want to trade and things signal, fires off a signal that I must enter, then I enter. I'm prepared before the time and I know about this before the time, rather than just jumping in with no plan whatsoever. So let me just close that for you guys quickly. I think that's pretty much it for the session, guys, and Casey. I know learning to identify these corrections is not something that's going to happen overnight. It's something that takes a lot of chart studies. And like I said before, I think before you guys reach or attend the next part of this webinar, that you should just go back on a 4-hour chart on this favorite market that you like to trade, and go and apply some of these techniques that I've shown you and see if you can actually mark out these corrections as best as you can. Like I said, after the second part, when we start applying market geometry, is going to become easier. I don't like such thing as saying easier in trading, but it does actually clear up a lot of confusion when it comes to corrections. So if you just understand what a basic correction looks like and its structure, you know what to expect. And then later on, part 2, we'll explain how we're going to use the market geometric techniques properly, so it gives you an edge in this market to figure out where these corrections can end, where these corrections might end. And then you always just trade in the direction of the trend. So let me just quickly go back to my final screen. Where was it? This one. Let me just cancel that. Just want to get back to my presentation screen. I don't know where it's gone now. Just hang on with me, guys. It's the first time I'm in Google Hangouts here.
You're doing a great job. If you hit that green button, it should show you your screens. The one on the left.
It is showing it. It's just not. Okay, now it should do it. There we go. Oh, this is Storyvert. There we go.
There we go.
There we go. So guys, that was a quick rundown of my corrective patterns, and I'm just going to give you a quick intro of what to expect in part 2 of my strategy. And this is probably going to be the meat of the whole presentation. We're going to be focusing on market geometry. And one such technique is a pitchfork. I'm sure a lot of you guys probably heard of the pitchfork. Some people call them the Andrews pitchfork, which was the guy that actually developed this. There's different settings you can use on these pitchforks, which becomes very important in my sort of analysis. I don't just use the run-of-the-mill standard settings. This is also very important if you understand how a correction actually materializes. You also know which pivots to use, which is very important too. And then I also treat every single correction in a different way when it comes to applying market geometry to it. And then, like I said, very importantly, it's not just about market geometry and identifying zones. Is once price actually reaches those zones or entry levels that you're looking at placing trades, that I need to see confirmation. And confirmation signals, I'll be actually going into much lower time frames and look at candle reversals. And the only actual indicator that I use, that I'll share with you later, that's also just a run-of-the-mill indicator that everyone should have. I only use one indicator in this whole strategy of mine, and that's where it comes in. And basically that filters out bad entries from the good entries and gives you much higher probability of being correct about your entry. And at the same time, it also minimizes your risk as much as possible and maximizes your profit. And then again, I'll be showing you loads of examples and some more recent trade setups. Always just showing you stuff that I've actually forecasted to members of our forecasting service. This is not something I suck out of my thumb. In hindsight, these are actual zones or levels I identified before time so that everyone was actually ready with their orders, either waiting. I know there's some guys that do not have time to be staring at their screens at the moment. So there's two ways you can approach the strategy. You can go sit limit orders, but if you do that, you'll have to have larger stop losses. But if you guys actually want to just do the course and learn these techniques, it's all there. Waiting for confirmation entries for your entries is a very important part of this course for me. And it's something that will be a great takeaway to actually show you how you can enter these trades with massive reward versus risk potential. And then my final slide, what to expect in part 3 of my strategy would be pretty much a bonus sort of thing, trade management techniques, which I find is a very important part of trading. It's very easy to get into a trade, but it's much harder to manage an open trade properly till its end. And also be, how do you trail your stops, set your targets, and all those sort of things, so you can maximize your profit while your trade's underway. And that pretty much concludes what I have to show you guys today. I hope you enjoyed what I've shown you. I know Casey's going to quickly talk a little bit further about the course and some of the performance stats and so forth. And then we'll go into the question and answer session afterwards. So like I said, one last thing before I go. This was a very quick rundown of corrective patterns. There's way more to this. The actual course has got, I think, over 100 pages that you got to study. And everything that you study requires that you actually pull up your own charts and put in your own effort to go and find these things. And as always, we have a great support team, a great frequently asked section that you guys have access to me via email. And when you have any sort of questions or any charts you want to go and run over with, I'm there to help. So it's not something that we just buy and leave you guys alone. We've got a great support team behind us. And you also have access to me afterwards. And that about concludes my side of the presentation today. I hope you guys actually make it for the more exciting part 2 and 3 afterwards. Okay, Casey, back to you.
Okay, excellent. So let me see if we can get back to my charts here.
There we go.
And I think we might have it here. All right. So I just want to say thank you. Let me know if this pops up. It should be showing. Let's see here. Yep, there we go. Okay, so thank you so much, Richard. That was great material, great training, and I just want to see if you guys enjoyed that as much as I did. If you did, just go ahead and say so in the chat if that was interesting to you, if it was helpful, if it was useful. Just let us know, because we're doing this for you guys. And like I said, a couple different things is, number one is we're going to do a question and answer period right after I do our offer, our special webinar offer. So stick around to the end and you can ask Richard any question, and we're going to stick around and answer any questions that you guys have. Richard will ask you specifically. The next thing is for the next presentation about the advanced parts of the course, those presentations are actually only going to be available to the course members. So you will have to sign up to get those presentations. But you will have access now to answer any questions you have. So let's go ahead and get going, and we'll get to the question and answer. I do want to just read one question one comment to Richard while he was here. And it was from Ron. And Ron said, "I'm really glad you're doing a webinar, Richard, and I appreciate all of the email updates that you've been sending me. I've been meaning to join you because I understand that price action is about a system, and I love your work." So I just thought I would share that great comment.
Great.
Thanks, Ron.
Thank you.
Okay. So real quickly, we've designed the course to help you to become a profitable trader in the shortest amount of time. But yes, there is still the problem of having to do it and to learn it. There's nothing you can do about it. You have to put the time in to get the results. And so since I'm getting all these great comments here, are you guys interested in hearing about the offer that we have? It's a special price for the webinar for the trading course, and I'll tell you exactly what you get so there's no confusion, because we don't want anybody to be confused. Thank you. Thanks for all of the comments and the questions. We appreciate it. So our special offer today is the EPS course, which contains every single thing that Richard uses in training. It's Richard's complete work as a trader. And I'm just going to look at this here. There's part 1, analyzing the market the right way, the 5 components of market structure, your market geometry toolbox, corrective price pattern summary and looking forward, developing your live market trading strategy, strategy overview, multiple time frame analysis, Fibonacci ratios, corrective patterns, which is what we did today. We did corrective patterns. So we just did one small piece of this massive system, and it's not overly complicated, but there's a lot of different parts that we have to master. And as you can tell from the way that Richard does his work, is he's very detailed and he really explains things clearly, so there's no confusion. So these are all of the different things that are included, and there's some really great components that are involved. There's 3 really big things that this course will do for you. And the first one is it's going to lay a great groundwork for how you understand price action. Really important. And then predicting the market doesn't mean always knowing what will happen next. But you still need more than just great analysis. You need the how to trade it stuff. And that's really what you get with this, is not just theory, not just technical analysis, but the actual how to trade it. I've seen so many great technical analysts, but they don't know how to trade. What we'll teach you is how to do the analysis and also how to trade. So it's not just a strategy, it's a system. And there's a very important distinction between the two. And a strategy is a set of criteria for how you to make a specific trade within a specific situation. But a system is an approach to trading and understanding the markets whereby you can employ a multitude of strategies within that system. Really key component. And a strategy can be really valuable. And frankly, as a businessman, I might be better off selling individual strategies, which is absolutely very true. But the system is what I believe in, and I really believe in Richard's system. So part 2 is broken down not just into one set of entry rules, exit rules, etc. It's the guidelines and charting examples for all the strategies you can employ within the market structure. With this, you will be equipped with an entire arsenal of strategies for every market approach. And once you understand how to position yourself with the flow of the market structure, the techniques you can use to pull profit from that structure are absolutely limitless. And 3, I think this is, again, the most important part. I talked about my life success plan, and that's getting access to great people and access to Richard. When you purchase the course, you will have email access to Richard, and he is very thorough with his answers. He doesn't leave anyone behind. If someone asks for help, he's there to help you. He's not just say, go read the course. Richard will really help you. He might point you back to the course, but he's going to take the time to help you out. And that's what really makes this special, in my opinion. So now you have access to someone who's used the same system to achieve the exact same thing that you want to achieve. So it's not just access to Richard, but access to someone who's actually done it. If you're going to talk to someone, you want to talk to someone who's actually done it. And so we're very serious about making this work. Our reputation depends on it. We want people to succeed. And the best way that I know how to do that is to confidently give you a guarantee. So we have a guarantee with this course. We're so really confident in it. And one thing, this slide says access to me, but I actually meant access to Richard. One thing about access to having to Richard is that you don't have any excuses. You can always ask Richard for help, and you really don't have an excuse to not do that. And that is a downside. A downside, if you're a person that likes excuses, you won't have any. You could probably still make them up, but they won't hold any actual weight because we really do give you everything that you need. And so now we want to talk about our guarantee. Really important. Our reputation is on the line. We're going to take all of the risk on this because we really know that it works. It's actually not a lot of risk because we're that confident in the course. But if you have been following me for any length of time, you know that I've been scammed and it was really terrible. It was a horrible experience, a horrible feeling. So I want to make sure that everyone doesn't have to go through that with this type of training. That's why I do the best to really go through the real deal. That's why I found Richard and find really good traders to work with. So it's a terrible experience to get taken advantage of. So I want to make it easy for you to not worry and start getting trades right away. And here's what we're going to do. We're going to make sure that you're satisfied. We want you to be satisfied. If you're not thrilled with everything you learn in the course and you get in Richard's training, just shoot us an email and we'll refund the full price of the course. And if you don't see an incredible gain in the opportunities and consistently, just let us know and we'll give you a full refund of your investment. So we're giving satisfaction and performance. We really want you to be successful. If you're not, you can ask for a refund. And so normally the course sells for $297, but today we have a special webinar only special. This is only for the webinar. And we're going to tell you a little bit about it. Since there's no risk on you, we are going to now offer the course that normally sells $297. That $297 investment would give you a complete foundation for the trading of the most profitable system I've ever come across, along with trade setups and things that can really help you. So let me ask you this question. If you had all the tools to build wealth quickly and confidently starting right now, and if you could turn your account into 6 figures in the shortest amount of time possible, wouldn't that be worth a $297 investment? So just to answer that question, would it be worth that investment to you? So I see people are answering yes, of course it would. It's obvious. I know I'm asking an obvious question here, but I'm not actually going to ask you to invest $297 because we have a webinar special. And normally we charge $297. And one other huge benefit about the course is that it helps me save time. And the reason I say that is I'm a really busy guy, right? So I have 5 businesses and I have 9 children, which I don't know if you guys knew that, but I'm also an active volunteer at church. And so what that means is I don't have a lot of time for trading. But what I do is I use Richard's system every day, and it has really helped me. And it doesn't take a lot of my time because it's just pretty straightforward. So I wanted to actually show you how it has worked for me personally since I started working with Richard. And Richard did talk about Boeing, and I actually did take this trade with my live account, and you can see this here. The way I did it was I bought a call, and you can trade the stocks by buying calls. We're not going to get into options trading, but it's just one way to do it. But I bought a call, and you can see I bought it on August 31st when Richard made the trade call, and I closed it. I bought it for $1,600, and then later I closed the same trade for $3,145. So it was about a $1,500 profit, if my math is correct, on one trade. So obviously the course can pay for itself about 10 times over just on one trade. Just to get you an idea of how powerful this is. And you guys saw the Boeing, and that was a real setup because you guys saw it earlier. Another setup that I took was USD Mexican. And I highlighted the risk to reward here is because this is where the stop loss was, and this was the target. Richard's system has a great risk to reward ratio, and over time with that win rate, it really helps grow your account. And one other chart these are all live trades that I took. This was a crude oil trade. Richard is a great crude oil trader. And here was the entry. You see again, the risk to reward ratio on this is really good. And overall, the system has performed pretty well. You can see this is if you started with 10,000. We don't know where you're going to start, but if you start with 10,000, it would be worth about 40,000 now. And the average is 378% in 8 months. And actually, this is a little old. It's higher now. But it's 57% win rate. The average win is $1,771. Average loss, $629. So that's a 3x. So your average win is 3 times bigger, and some of the trades have been even bigger than that. Average month is $3,429. So obviously that would be worth a $297 investment with this type of knowledge. Plus the knowledge that you get, it can never disappear. You'll have it forever. So for today only, in this webinar, you can get the course for a special of $197, which is $100 off the price, and it's extremely, extremely valuable training, as you have seen. So just to summarize, it's not just a course, it's the complete Exponential Profits course. It is an entire system that'll make you wildly profitable as a trader if you follow it properly and you take the time to learn it. And that's valued at $297. And plus bonus member-only content to further your trading edge at $997. Richard's always adding bonus materials, so it's not just the course. There's just great stuff added to it on a regular basis. If you get his emails, you know how good they are. His bonus material is phenomenal. And then lastly, the most important part of the whole thing is access to Richard via email. Any questions you have, I value that at $19.97, but I think it's probably even higher than that. So you can cancel for any time. You can keep the course as a thank you for giving it a try. We don't recommend that you do that just because we've really put a lot of effort. Richard's put a lot into this. Both of us have. So we really want you guys to take advantage of what we're offering you today. And so go ahead and click the button below and get started right away. And thank you. And Richard and Nathan, I want to thank Nathan, who is doing a tremendous job on support and on getting he just does so much work. Just want to thank him as well. So we have across the board, we have a great team. And so we just thank you guys. We're all going to be here now to answer questions that you have via chat. Nathan has posted the link below, and you guys can just go ahead and join up right now. And now I'm going to open it up for questions in the chat. So Richard, are you ready for some questions? If you guys have any questions for Richard, there's still about 100 people here. So out of all those people, there's got to be some great questions. I'm going to go ahead and scan through some and see what we've got here. Okay, so Ron is saying that he's been trading for a little while, but the fact, let's see, but the fact that Richard is not just trading foreign currencies, he likes the fact that Richard is not just trading foreign currencies. He's very interested in learning more about market geometry for all markets. That's kind of a comment, not really a question.
I think the great thing about this course is that you can apply it to any market, which just really gives you an edge. I know some people's got something against Forex, or some people just like trading commodities, or, you know, everyone's got their own preferences. So it works with market structure, and every market, although the market structure might change from time to time, the strategy can be applied to any freely traded market that's got enough volume on it. So thank you, Ron.
So I have another question about using all of the different tools with Elliott Wave, Fibonacci, and Pitchforks. Is it really necessary to use all of the tools to make this system work?
I think focusing completely on just the general look of what corrections look like, rather than focusing completely on labeling it correctly or worrying about labeling correctly. I think probably the most important part of this course is the correct use of market geometry and pitchforks. The knowing how a correction unfolds and what to expect of a correction is obviously also important. But I think of more important, I'll definitely weight more importance to using pitchforks properly and knowing which pivots to use. So they kind of like complement each other. And I would say, yes, take your time to actually use all the tools that's in the course and just keep on drawing and drawing and drawing until you understand it. And then at some stage, when you get more proficient at this, you'll be spotting these corrections happening in front of your eyes. And then if you apply market geometry over that and some of the other smaller techniques that I teach in the course, it'll become way clearer. It might sound like a lot at the moment, but I promise you, it'll all become easy to use in the end. It's just obviously a lot of information at first to take in. But I can't promise you how long it's going to take. Every person's got a different learning curve. You might have more experience than someone else or not. But if you just follow everything and keep practicing, and if you don't get something right, and send me some chart examples. I always tell people, don't just ask me a question. Send me a chart example of the work you've done, and I can always lead you in the right direction. I think that's a really important thing to tell.
I think that's a really good point about actually sending in a chart that they're working on, so you can really see what they're seeing and what they're thinking. When you're looking at a chart, it kind of helps you understand kind of what they're thinking when they're looking at a setup. I like that a lot.
Cool.
So guys, if you have a question, remember, this is a very special opportunity to actually be able to ask Richard a question. So please take advantage of this time now and leave a question. Here's an excellent question, Richard, and it's from Ravi. And Ravi is asking, is market geometry drawing a subjective technique or is it rule-based?
Ravi, very good question. And it's probably got a two-part answer to this. Firstly, I'll start with this. Markets cannot have a set rule, in my opinion, or rules put over them and expect you're going to get the same result every single time. Using market geometry properly is a little bit subjective, but there are ways that I teach inside of my course that can give you clues and hints as to if you're on the right track. Are you using the right pivot? Are you not using the right pivot? In most cases, and I would say probably 95% upwards, you can just use simple pivots if you know what sort of correction you might be dealing with, and then identify a level where a correction might be ending with no issues. But like I said, markets are a bit more complex than this. You can't force a set of rules on the markets. It just doesn't work that way. So yes, there is a certain element of subjectivity when using your pitchforks, but there's ways to get around this. And before price actually reaches levels that you want to trade, there are subtle clues that your pitchforks will show you to show you that you're on the right direction. And there's lots of examples in the course that actually goes through this and touches on the subject. So yes, there's a little certain amount of subjectivity involved, but there's ways to get over it. And it's not something that should be holding you back at all.
Great answer. Ron has a good question. He says, with so many markets to look at, how do you know what to look at? And it seems like it could be very time consuming trying to find new trade ideas.
Yeah. One thing you guys got to remember, we also got a forecasting service for members where they actually, people that don't have that much time to do all this analysis on their own. And I come up with new trade ideas, and you could probably see this in the emailers that we send out for free to you guys that's on the subscriber list, is that behind the scenes, it's a lot of work going on. Apart from just writing these forecasts or giving people trade ideas, requires that I go through a lot of charts. Obviously, I'm a bit more experienced than probably most of you out there that's attending this webinar today. But I can do anything from having a few charts of my favorite charts open, like let's say 4 or 5 different Forex pairs, a few commodities, maybe CFDs if you guys can trade that, and actually draw my charts out, and when things do, like when there's corrections appearing at some of these levels, then start analyzing them. But it could also be a simple thing as like not following news as much for clues, but when news affects a market or something like that and it shoots into one direction, I would not trade that on its own. But normally, if a trend does develop out of that, then it comes on my radar. So I could be looking all over the place to find trade ideas for you guys. So there's a lot of work that goes on behind the scenes, but I would definitely recommend for anyone starting off to focus on one, maybe two markets max, and to get the strategy under the belt and start understanding how the whole strategy comes together rather than focusing on too many things. Leave that to me. You guys should just focus on one or two things and become an expert at it. Once you become an expert at the market that you trade, yes, then start looking for more opportunities. I think it's very dangerous to have a new trader just looking all over the show for trade ideas, because it might just as well confuse you completely and you'll probably end up not trading at all. So I think that's definitely the advice I'll give to anyone that might attend or buy into this course, is just start focusing on your favorite market or a basket of a few markets and start analyzing, drawing until it comes out of your ears, applying the method, go back historically and see if you could have nailed the end of those corrections. And the more you do that, the better you're going to become at the right-hand side of the screen where all the action happens. And that's pretty much all I can say about that. You just need to leave the looking for markets for me. I think when you start off, just focus on as few as possible and become very proficient at it.
Okay, excellent answer. Now, I've got one question, and I'm not sure if it applies to our course or not, because I just doesn't seem familiar, but I'm going to ask it. And he says, do you use pivots, and how do you identify pivots?
Pivots, swing high, swing lows, same sort of thing. If you actually become proficient at identifying what trend might be developing, I would then identify which of those pivots are more important for me to use my market geometry on. There's also another part in part 3 when we're actually going to start looking at managing open trades, where to place your targets and how to trail your stops, that I'll use previous important pivots by basically just glancing over a chart on a historical basis and applying pitchforks on that into the direction of the trade we want to take, and then manage my trade accordingly. So yeah, important pivots are important. And if you actually applying market geometry over corrections, and you've got a basic understanding of what corrections look like and what correction you might be dealing with, then you will be selecting the right pivots in the first place to use your pitchforks on. So yeah, pivots or swing highs, swing lows, some other people might call it, are very important to use. Especially that's why I want to use a good blend, a combination of understanding what a correction looks like and which proper pivots to use and apply in market geometry to. Okay.
Excellent. So Samantha was asking about if there's going to be a replay link. And yeah, we'll send a link to everybody that signed up so they can watch it later on. Francisco is asking, do you use hard stop losses and profit targets in your broker account, or do you use mental or hidden stop loss or take profit? Thank you.
I always use a stop loss. I will never do without a stop loss, and it's a hard stop loss as well. In the course, there's two ways to approach this. There's a very, how can we say, conservative way or technique of entering the markets. And then obviously, if you don't have much time to stare at the screens all the time, you could probably place limit orders without following your entry conditions. Either way, you always place a hard stop. Now, what's really important here that is, since we're using market geometry like pitchforks, and then also following a correction, when a correction in theory is ended, then you should be placing a stop behind an area where you think the correction finished. And if a correction did finish, and we can never forecast the future, and this is something no one can do, then price should actually reach areas of where the correction started from in the first place. And there's mostly those areas where I would place targets. That, and in combination with using pitchfork in the direction I want to trade in. But that we'll talk about later. Very important is that if you use pitchforks, I have found that you're actually placing your stop losses, or when you're trailing your stop losses, behind levels that are not common that most other people's using, and levels that tend to get hit. You also see that although I don't have a high risk tolerance, I also follow a technique where I give the market enough room to move in properly before the actual, let's say, resumption of the trend in your direction actually starts off, without trailing too tight off the market and get stopped out. Because I think one of the worst things in trading is not actually being stopped off or stopped out on the onset, but actually being stopped out too early in a good trade and then see it go into your direction afterwards and completely missing the boat. So yeah, I always use stop losses. They are hard stop losses, but I would definitely say if you're using the techniques I'm using to trail stop losses once you're in a trade, you're actually using levels that are not common that other traders use, which is a very, very powerful thing to know and actually use in your own trading.
Yeah, that's actually pretty cool, because I think what most traders do is they put their stops at like clear support and resistance areas. And
Yes.
that's like the area that the market is likely to go, because that's where all the orders are. And so
Correct.
when you put your stop there, you're in a lot of trouble. It's good to hear that you have a better way of doing it. And it's also good to know that you're really caring about your risk management, because I think that's super important.
For sure.
I want to take a minute to thank Michael and David, who just joined up with us with the course. Thank you so much. Really looking forward to having you. So for those of you that joined, Michael and David, really appreciate it. We know you're going to love it. So Richard, another question about money management is, can you talk a bit about money management and risk? Because according to your chart, you started with $10,000. And I understand risk is important. Can you tell me a little bit about how you use the risk in this system?
If you look at our performance, we had to base, and that is actually for our forecast members, which you guys have to understand is different from the course. Casey didn't really go into that yet. But we actually provide a forecasting service where I actually do all the analysis for you and then provide you these levels where you can enter into. Place limit orders is mostly for people that, don't have much time to sit in front of their charts all day long, etc., etc.
Yeah, people like me.
Yeah. So, that being said, apart from what the course teaches, I always use, and this is the performance-based that we shown you earlier with the equity graph there, is that we based that on a 2% risk per trade. Okay. And that was for every single little trade that I forecasted. And what's really cool here is that we have nothing to hide either. Once you become, let's say, a member of the forecasting service, which Case will probably talk about in part 2, then all of these levels were given beforehand. It was nothing that we sucked out our thumb afterwards, nothing that we made up. So the course is, or those performance stats are based on if you took every single little trade. Now, we also have to be realistic here that the performance in that, on my equity graph there, might not be possible for everyone because of different account sizes, or some people might not want to risk 2%. They might be happy with 1%. I can't teach you exactly what sort of risk you got to take on. But also keep in mind that some people do not have access to all the trading instruments either. So be realistic with yourself and just know that the performance stats there was actually a representation of the power of this strategy and what it can do. But every single person that's going to be trading this will obviously have different access to markets, different account sizes, different, or just, don't have time to trade all the time. So that is mostly based for every single forecast that we've done and that's triggered, and every single loss, good or bad, was logged into that performance there. And as you can see, it does speak for itself.
Yeah, and I would just say about the different markets, the way I do it is that I have 2 accounts. I have one account that allows me to trade the stocks, options, and the futures, and then I have another one that allows me to trade the currency. Yeah. There are some brokers where you can do all of them. I believe Interactive Brokers is one that allows you to do all of them.
That's right.
If you don't have access to that, then you can open up 2 broker accounts. It's kind of, that's how I'm doing it. It's kind of unfortunate, but it's actually working pretty good. So, because it's nice to not have all of your money tied up in one spot.
Yeah. It's just
Just
something
for safety purposes. Let's say a broker goes out of business, right? Because we've all known that happens. Yeah. So even, I mean, it's kind of a pain, but it's a good thing for safety.
You know, another thing, for example, if let's say I would do something on the Dow Jones or on the S&P 500, you know, if you do not have access to a futures account, then you can definitely trade the equity sides on it, like ETFs, something that tracks the performance of those markets. So just be a bit more like explorative. Don't think that you're only limited to just a few things. There are so many instruments out there to trade, but like I said before, try to focus on 1 or 2 things that you're already trading at the moment, and try to perfect that as much as possible.
Right, and again, Richard had mentioned that there is also, we've got the special on the course today, and if you do join us, like I just noticed that Ron joined us, so thanks, Ron. If you do join us after the course, then you will also have an opportunity to join with the actual forecasting service, which is where Richard will send you the trades if you desire to do it that way as well. So Nicholas has a question about how you take your trades via the timing. Do you take your trades only at the start of the week, and because you need to make the trade complete before the weekend only when you manually exit to avoid risk?
Good question. In the course, you'll probably see that I do warn against taking trades into the weekends. That's especially true when you start looking at stuff like futures. The margin requirement that you normally have. I mean, taking something overnight, some exchanges or brokers might raise your margin quite a bit. But to be dead honest with you, if you look at most of these trades, especially in the forecasting service and the performance graph that you've seen early on, some of them lasted for months. Some of them might last just a few hours. So, you know, that's really a personal sort of risk thing that I can't teach anyone. You know, I don't care really. I think if I caught the end of a correction and I'm right about the end of correction, then normally before the weekend hits, I would know I'm on the right side. And knowing a little bit more about market structure and how things unfold, I'll normally have a really good idea of like, should I be opening or should I be closing this or keep on holding for my targets? But in most cases, you know, once you hit the end of a correction and a trend resumes and you're starting to figure out, yeah, you're on the right side of this and you got into a level that's very near to the end where that correction was, then I have no issues holding into the weekend. But like I said, it's a personal risk consideration that every trader needs to take for his own self. And then again, it will also depend on how much money you have in, let's say, a futures account. If you can handle the margin, or if something happens over the weekend on, let's say, crude oil and something happened in Saudi Arabia and that thing gaps through your stop loss, you might sit with a big loss. So, you know, that's where you could maybe start looking at trading the spot price, or maybe CFDs if you have access to that. Trade something where your risk might not be that big. Some people got a huge account, so they won't have any issue holding positions during the weekend. So, when I enter a trade and I'm got a good feeling that I've been right and I entered very near to the end of that correction, I have no issues holding until I hit my targets.
Okay, I got 2 more questions for you, Richard. One is, will this course work with a 1-hour time frame or lower?
Yes. And if you do sign up on this course, so I mean, like I said, I've had a lot of people ask me this sort of question, and each one's got a different sort of like approach. I wouldn't say approach, but sort of like time limits in their lives. One guy might ask me, will it work on a larger time frame? As long as we use 3 time frames with a strategy, which we didn't cover that much today. But as long as you keep the ratios between those time frames right, you can actually either go down in time frame or high in time frames. Obviously, if you go to lower time frames, for example, and use a 1 hour instead of a 4 hour, then the other two time frames I'm using is also got to get lowered. But like I said before, I find that the 4-hour chart for me personally is a sweet spot chart because it eliminates a lot of noise. It depends on how active you actually want to be. If you want to go to a 1-hour chart, you might get more setups, but your profit might be less, or you might even be taking more stops on your trades. Because I used to be a high frequency trader back in the days, where I used to work for a prop firm, and I just simply can't do that anymore. But every person is different, you know. If you can continue to focus on a smaller time frame chart, then by all means it's possible. It will definitely work. There's no issues with that.
Okay. Here's a really good question that I'm not sure how you're going to answer it, so I'm really interested in the question. And it is that markets are always changing, and does that affect your strategy? Now, I have heard that one of the reasons why traders are not successful is because the market changes. And some strategies stop working, and they might work for a little while and then they stop. And like if you look at some back testing, it might work for 5 years and then it stops working, and then 5 years later it starts working again. So the question is, the markets are always changing. Do you believe that, and does that affect this strategy?
Very good question. I do believe markets change over time, probably mostly to do with volatility. Periods of the year it might be going through, political interference, all those sort of things. But one thing that does not change is human behavior, and that's why I follow patterns and corrective patterns. If you can correctly become proficient at what a corrective pattern looks like, you know what to expect. Even if it gets volatile, even if it gets stopped out, then enter again. A lot of these times when volatility does pick up, you know, you can get stopped out, but I always take 2 chances of the trade. But that being said, the great thing about market geometry is that it's dynamic in nature. And what that means is, if you look at previous market structure on, let's say, a chart, and you identified a previous correction that was big and large in size or whatever, before a trend continued or change in trend happened, if you keep drawing your pitchforks or your market geometry over the most influential corrections or pivots, that is dynamic in nature. Because what's going to happen in the future using your pitchforks after using those pivots is that market would probably follow it for a great deal of time, giving you plenty of time to enter all over the show. But then at some time it will stop working. But that's then where we just have to move on again and use different pivots. So you need to continuously change pivots. When something can continuously work for ages, and then all of a sudden just stop working. But like I said, we understand the idea of that markets are dynamic in nature. So what's happening on the right-hand side of the chart, I'm a firm believer, is a result of what happened previously on the chart. And that always changes. So if you can use market geometry as things changes and not just always use it over the same things, you'll have a way better chance of being right and actually follow market structure as it develops. So in the sense of being, you're always on the right side of the market, and I don't think that will ever change.
Excellent. Well, Richard, I think we're going to wrap it up. We've been going a long time. Okay. I want to thank everyone that's involved, that watched and participated and asked questions. When your participation makes it a lot better for everybody else. I want to thank Richard and Nathan. You guys are doing a great job. And this is a webinar only special. So we're going to send out the replay. So you're going to want to take advantage of it right away. A lot of people have already joined up. We want to thank all of you, and looking forward to doing this again sometime. Thank you all.
Perfect. Thanks, guys. Have a good weekend.